Hey everyone, it's Mortgage Mel, and it's time for today's Mortgage Minute as we talk to realtor extraordinaire Shirley Leatherwood-Garrett once again. And today we're going to talk a little bit about different kinds of loans. But I know, Shirley, you had a couple of questions about what kinds of loans are available.
Yeah. I get this question a lot. Some people come pre-approved and they don't know what type of loan they have. And so it'd be good for people to know when they reach out to you, and you come back to them and you talk to them about whatever loans they're eligible for. So I just thought it'd be kind of cool to break down those top three that I see, which is conventional, FHA, and VA.
And one of the things that I wanted to mention is it's really important to have communication between the loan officer and the realtor, because when you don't have that communication is when you get confused about what kind of loan this person might have. And sometimes it's not mentioned on the pre-approval, and I think that's really important also, is to have that listed. And also better communication between the customer themselves and the loan officer, because I think there's something weird that goes on. There's a little fear, not necessarily with the realtor and the customer, but the customers, when they come to me, they're a little afraid to call me sometimes. And when they do call, I think it's very intimidating for them.
Yes, I totally get it. And that's why one of the things that we do as agents, we do buyer consultations. And in that discussion, I noticed that a lot of times people don't know, or if they do know what they have, they don't know the difference.
Right. So a conventional loan is probably the most advantageous for everybody to get, because it will have the most offerings as far as different programs within it. So for example, for first-time home buyers, there's a really great program called Home Possible, and Home Possible offers slightly lower interest rates for people who have under $80,000 a year in income.
Okay.
And because of that, also offers a lower down payment option. And so people don't realize that on a conventional loan, you can have as little as 3% down. For most other people who don't qualify for that program, it's 5%, and that's really not all that much. I think that people assume they need 20%, but you don't for a conventional loan. There's a lot of options. It allows for a wide array of credit scores, but it does edge towards a better deal for people with above 700 is about where I would cut that off. After that, if we get below a 700 score, then an FHA loan becomes a better option. And the reason is the mortgage insurance per month is capped at 0.55%. So that means that they're going to get a little bit better deal on that monthly mortgage insurance. The downside to FHA is twofold. One, you have an upfront mortgage insurance premium that you have to pay, and that is 1.75% of the loan amount. So that can be several $1,000s all on its own. And I think for some people, that's not going towards the equity in your house. That's just extra expense.
Right.
And a lot of people who are trying to qualify for an FHA loan already don't have a whole heck of a lot, right? And so that can be a little bit of a downside. But also, the appraisal for FHA can be a little more stringent.
Okay.
They require that there's no peeling paint, and
Right.
if there is, they will insist that it be fixed ahead of time. And so sometimes sellers don't like that as much.
I noticed that when we're looking, I'm always looking, especially when someone has FHA, in those private remarks to see if there's something where they're like, no FHA. And those are things that a good realtor that knows what happens when you have an FHA loan will know when you walk into a home, because sometimes pictures can be deceiving. You go in and you're
Sometimes
like,
there are
this
bigger
is
problems.
not an FHA approved home. So we don't even have to go that far. But one thing I will say for FHA is there a difference when it comes down to appraisal? What if something's brought up at appraisal and it's an FHA loan?
Appraisal or inspection?
Appraisal.
Okay, so if it's brought up at the appraisal at FHA, then the appraiser actually puts it in the appraisal report, and he or she could actually require something be changed.
Additional fixes.
Additional fixes. So, and that is why FHA is a little more stringent. They have that in the appraisal process in addition to a possible inspection issues.
Yes.
And I think that's one of the challenges for it. But it is a great option for people who are in more of a high risk pool, because you're sort of pooling everything together. Everybody's paying into that program, and it makes it a little bit of a better option for some people. And it does make homeownership possible. So that's really cool. Then we have the VA loan.
Yes.
And you had asked, that was your third question.
That was the third
as
one.
you probably wear your
Proud
bring on it
veteran
on over.
homeowner. Now my husband's the vet though. But yes.
Okay, but thank him for the service.
I shall.
But a VA loan is really great because you don't have any money. You don't have to put any money down as long as it works. And when I say works, debt to income ratio. So if your debt to income ratio works with 0% down and no mortgage insurance whatsoever. However, there is a funding fee for that also.
Right.
So you're paying in at the beginning, assuming you got out unscathed. Now, if you have any injuries that are permanent from from your service, then you likely could have a lower funding fee or even no funding fee whatsoever. So that's something that we would look up right up front. If you said, hey, Melissa, I want a VA loan, then I would be looking up your certificate of eligibility. We would get that in the file right away, and we would be checking for those benefits and what would be appropriate for them.
Yeah.
So, but I think that's why that one's a really great option. It also lowers, so both FHA and VA offer slightly lower interest rates as well. So let's say, just for argument's sake, we had 7% today. You'd see VA and FHA closer to 6.6 or 6.7. So they're definitely below where the regular conventional market is. But again, if you are a conventional loan and you have income issues, you're under $80,000, you can get that home possible. And then we're back down into that category as well. So we can get slightly lower interest rates from that also.
Yes. And a little caveat to that, something interesting you told me with the home possible. I have people who might be approved a little less and they have FHA, but they want a condo. That actually sounds pretty good with the home possible, because it's that conventional loan with a 3% down that opens them up to be able to get condos. Am I hearing that correctly?
Yes,
That's
and condominiums
really awesome.
also are hard to get approval, because not a lot of condominium complexes have the FHA approval.
Correct.
And so if you have an FHA pre-approval and they're trying to get a condominium, that can be really, really tough for people. For sure.
Great information.
Okay, so today we talked about conventional, FHA, and VA loans, and sort of some of the differences between them, and people qualifying. And also, don't be scared to give us a call.
Yes.
Because honestly, we're here to answer the questions, and I don't think I've ever yelled at anyone in my career.
No.
So, I mean, I might question, hey, what do we do here? What happened on this? Or could you get me that documentation? But I don't think I've ever yelled at anybody. I certainly don't bite.
And you should definitely know before you go. Before you go shopping, you need to know what you can afford, and to know what your loan type is, so that a realtor like myself, Shirley Leatherwood-Garrett with Realty Executives, can help you through the process in as seamless way as possible. And as you see us sitting here talking, it's very important that your realtor have a great relationship with a lender as well.
Absolutely. Good relationships, good communication between us and also between us, right? And that's going to make sure that you have the best experience possible.
Yay.
Well, thanks for joining us today. Give us a like and a follow, and ask any questions in the comments. Have a great day.